US stock market was up and up really big. In fact, I believe I heard that it may have been one of the, if not maybe the largest up days post-election that we've seen. So stock market was on a tear on Wednesday afternoon. Hope you're enjoying your sunny Thursday here. This week's market update is not nearly as data focused, but as I'm sure you all are very well aware, obviously some very clear market moving events over the past couple of days. And so most of our conversation today is going to be about that and what has kind of occurred just in this week here most recently. Before we do jump into that, I do want to touch on the non-farm payrolls numbers though as well. So we'll have a little data and then a lot of big picture, market moving events. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out some of the noise along the way. And again, I'm going to start this week's update just with a quick data point from last Friday. We talked a lot about jobs last week, and the last item to come out was non-farm payrolls, which came out on Friday. And I wanted to highlight this mostly because of how surprising it was. For the prior month, we only added 12,000 jobs. So this was so shocking that I did want to make sure to touch on it. Although I know we've got a lot of things to cover here with some other events that have occurred here in the last couple of days. It was not a good number to see. And so I did want to make sure that I didn't skip over this. But I'll leave it at that and we'll jump into kind of the core of where we stand here on Thursday, November 7th. So there was obviously a pretty big, newsworthy event here this week, which was, of course, the election. And I'm not necessarily going to talk about the political side of it, but what I do want to share is more so what we saw on Wednesday as kind of a result of the anticipation of what what's likely to happen at this stage. Most of you obviously may be aware at this point that Donald Trump will be taking office. There's still maybe a little bit of uncertainty as to whether or not Congress is made up, all Republican or potentially a mix. But it kind of looks like we may have a Republican president, House, and Senate. And so basically what I wanted to share is some of the observations from the markets on Wednesday. Again, politics aside, just purely what we saw in terms of what markets moved and what that might be telling us so far, okay? So generally what we saw were stocks were up. US stock market was up and up really big. In fact, I believe I heard that it may have been one of the, if not maybe the largest up days post-election that we've seen. So stock market was on a tear on Wednesday. And here we are on Thursday, still, generally depending on where you look, but generally up pretty good as well. Now, whether that stays remains to be seen, right? This is 2 days into this. And so a lot can happen. And depending on where things go and policy and all that, that can absolutely shape what we see from here. A lot of times with things like this, we can see a knee-jerk reaction, and then we see ultimately where things kind of fall into place, right? So keep that in mind, but certainly a good sign for the stock market so far. Within the stock market, though, we also saw real estate and consumer staples down for a couple of indexes that make up kind of the US stock market. So that is important to kind of keep an eye on. We also saw international stocks down. You can probably guess why, but as a result of potential tariffs, likely is why we saw some international stocks see a drop on Wednesday there. Bond yields were up, oil prices were down. And basically, if I can kind of try and summarize what I think this is telling us, it's likely suggesting that the stock market likes it, and especially smaller and mid-sized companies, they did extremely well on Wednesday. It also generally might tell us that on the concern side of it, there might be a little bit of concern for inflationary pressures, basically with bond yields up and with some of the impacts on consumer staples and real estate, that could be a sign that maybe there's some concerns about the federal deficit growing and therefore, maybe some inflationary pressure. So that is the election, right? Now, let's fast forward to today, where we also had a very large market moving event, which actually didn't move the market as much as anticipated, I guess. But we had the Fed press conference today. So Thursday, November 7th, usually it's on a Wednesday, but they moved it to today, given all the election, craziness and everything going on. But the Fed did have their press conference today. The decision was that the Fed dropped rates 25 basis points. So again, 0.25%. And a lot came out of the press conference. They said that, inflation is closer to the 2% goal. But what they did highlight is that the core inflation number remains somewhat elevated, which I think is important because first off, there's a couple things within here. One is we've heard the Fed say time and time again how important core is. Now it seems that they're almost dismissing it in a way, but it is important to note too, because the core is technically what they say that they want to watch most closely, and it is not. It's stickier than I think that the Fed had expected. One of the things that I thought was really important as a takeaway as well is they talked about the risks of achieving their dual mandate, basically inflation and labor market. They shared that those risks at the moment seem to be roughly in balance. And in the past, the risk has been off, like it has not been equal, I guess is what I'm trying to say. So he shared one risk is that we have moved too quickly, and moving too quickly means inflation comes back. The other risk is, of course, moving too slowly, and he's concerned if he does that, there's damage to the labor market. And so what he's referring to here really is that balance of risk, again, for their dual mandate, inflation and labor market. And again, this is the first time we've really heard him say that those risks seem to be equally weighted at the moment. So very interesting to hear that doesn't necessarily give us a sense of direction on where we go, but it is absolutely a change in tone from prior Fed press conferences. All right. The other thing I wanted to mention is that he had, bear with me a minute, they dropped the word further progress out of their progress to 2% inflation goal. Someone asked about this specifically, and it was interesting. He said it is not meant to signal what's to come in December necessarily, but basically the point is that they've gained confidence in a sustainable path towards 2%. And they drop further so that they don't have to keep talking about whether they've made further progress each meeting. But the way I kind of digest this is essentially he's calling it a win against inflation. If he's not worried about further progress anymore, it would kind of suggest that they've made the progress, right? Now, obviously, they're not at their 2% target, so something shifted, but nonetheless, I think that's important takeaway from this as well. And then he had shared something towards the very end as well, which was basically that it's just a matter of where neutral is now, basically. And he had also kind of found a way to leave things open into 2025 and possibly even December. The way that he had shared some of their perspective heading into this meeting, it sounds maybe more likely than not that there's another cut in December. But I think he left it open enough that there could be a pause in December as well. So time will tell. Obviously, they always say the same thing. We're data dependent. We'll make our decision meeting to meeting. But nonetheless, there was a lot in this press conference today. And the interesting thing is, even with all of this, the market didn't really react. I mean, there's some slight movements here and there, and the bond market did, but the stock market didn't do a whole lot, which was really the first time that we've seen that in a long time. I guess you can probably guess as well. That's probably due to some focus on the events prior in the week. But nonetheless, very important to note, because over the last, 2 years or so, all eyes have been on the Fed meeting every time, and certainly has led to some market moving events. So we'll see what happens tomorrow in the markets. Maybe after some digestion, there's something that shifts a bit. But nonetheless, that's kind of where we stand. And mostly today, I just wanted to kind of give an update as far as some observations from what we've seen between the election and the Fed press conference in terms of generally what the market is reacting to at the moment. Now, again, that may stay, that may fizzle out, that may switch, but that's what we're seeing so far, just a couple days in. So hopefully that's helpful. Be sure to tune in next week. We will be discussing consumer sentiment and inflation numbers that come out next week, which obviously will be very relevant with the Fed conversation. But also, it'll give us a little bit of time to understand better how the markets are reacting to all this. And so certainly we'll kind of share just a broad catch up as well next Thursday. In the meantime, have a great upcoming weekend. We will skip the question of the week, given how much we had to address this Thursday. But enjoy the weekend, and we'll see you next Thursday at 3 o'clock.